Are you overwhelmed by your finances? Accounting Insights is here to help. Accounting can seem scary, but it's important. It helps us understand our money. Accounting is like a GPS for your finances. Think of it as keeping track of your money. You write down what you earn, you write down what you spend. This gives you a clear picture of your finances. Accounting is essential for everyone, not just businesses. It helps you make smart choices with your money. Whether you're saving for a trip or managing bills, accounting helps. At the heart of accounting is a simple yet powerful equation. It's called the accounting equation, and it forms the backbone of all financial accounting. It states that assets equal liabilities plus equity. Let's break it down to understand it better. Assets are the things you own, which have value. For example, your car or your house are considered assets. Liabilities, on the other hand, are what you owe to others. This includes things like a car loan or a mortgage on your house. Equity represents your ownership interest in your assets. Imagine you buy a car for $20,000. You put down $5,000 as a down payment and take a loan for the remaining amount. In this case, your asset, the car, is worth $20,000. Your liability, which is the loan, amounts to $15,000, and your equity, which is your down payment, is $5,000. This fundamental equation is the cornerstone of accounting principles. It ensures that everything in your financial records balances out perfectly. Every financial transaction you make, whether big or small, affects this equation and keeps your books balanced. Now, let's talk about how we record transactions. We use something called double-entry bookkeeping. Every transaction has two sides, what you give and what you get. We record both sides. Let's say you buy a coffee for $3, you give $3, cash, you get a coffee, expense. We record both sides of this transaction. This system ensures that the accounting equation always stays balanced. It helps us track where our money is going. Section 4. Decoding the three main financial statements. There are three main financial statements that every business needs to understand. These statements give us a snapshot of our financial health and performance. First, the balance sheet. It shows what you own, which are assets, what you owe, known as liabilities, and your net worth or equity at a specific point in time. This is crucial for understanding your financial position. Second, the income statement. It shows how much money you made, which is revenue, and how much you spent, which are expenses, over a period of time. This helps in assessing your profitability. This tells you if you made a profit or a loss during that period, providing insights into your operational efficiency. Third, the cash flow statement. It shows how much cash came in and went out of your business during a specific period. This is vital for managing liquidity and ensuring you have enough cash to meet obligations. These statements work together. They give us a complete picture of our finances, helping us make informed decisions and plan for the future. Section 5, Recording Transactions, a step-by-step guide. Let's look at how to record transactions. We use accounts to organize our financial information. Imagine you sell a product for $100 cash. This transaction affects several accounts. You would increase your cash account by $100. This shows you received cash. You would also increase your sales account by $100. This shows you earned revenue. Remember, every transaction has two sides. We record both sides to keep the accounting equation balanced. Section 6. Solidifying your understanding. More examples. Let's dive into another example to further solidify your understanding. Imagine you buy office supplies for $50 using a credit card. This is a common transaction in many businesses. In your accounting records, you would increase your office supplies account by $50. This entry reflects the addition of new supplies to your inventory. This shows you have more supplies available for use in your office operations. Simultaneously, you would also increase your credit card payable account by $50. This entry indicates that you now owe this amount to your credit card company. This shows you owe money on your credit card, which will need to be paid off in the future. Every transaction, big or small, should be meticulously recorded in your accounting system. This practice helps you stay organized and ensures that your financial records are accurate and up to date. It also helps you make informed decisions about your money, allowing you to plan and budget effectively. Understanding accounting basics is crucial for managing your money effectively and ensuring the financial health of your business. By grasping the accounting equation, double-entry bookkeeping, and the main financial statements, you can gain valuable insights into your financial health and performance. Remember, this is just a starting point. There is always more to learn and understand in the world of accounting. Don't hesitate to seek further information or ask questions to deepen your understanding and improve your financial management skills. Your financial well-being is worth the effort and time you invest in learning and applying these principles.